The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me. You're happy? Because I got a zinger in. I got a bazinga in. You're happy and fluffy, squeezably soft host. Once more, do we go into the breach, dear friends? Oh, come on. We do that. Why don't we do that? I don't know why this thing doesn't do it.
The following takes place between 2 p.m. and 3 p.m.
It does. Anyway, what do we have going on today? Well, if you were expecting volume today, you lost because we don't even have 1.5 billion shares as we're starting the show. And like I said, last few days, New York Stock Exchange consolidated tape, that's the NYSE and the Amex, which is 90% ETFs these days for volume. So, 2.2 billion, kind of what you're looking for. We went ahead, tested 2440. Yeah, that's what it is. 2440 within a couple of pennies. Did so, of course, on even lighter volume again, if it's even thinkable. But we have yet to crack that 1.5 billion shares on the day. This is at 2 o'clock. So, again, there have been a couple of days out here where we thought we were going to have the lowest volume in the last 5-7 years for a full day. That wasn't like on a Fed day or something else, just a normal day. But this is not just a little volume coming off. This is not just a little light. It's not even kind of moderately volume descending. This is a buyer and seller's strike going on here because, we're off $50 and $100 billion a day in the market. Said the other day that what we ought to be looking at is shorting the exchanges themselves, because if this continues very long, those things are going to crack, and they're going to crack hard. $50 billion a day going away from the exchanges, or $100 billion a day going away from the exchanges. Just how long can they keep that up? Used to be people screamed when you'd have a few billion shares, or a few $billion light coming into fund buying. But this is something. So do not be surprised. Conditions are once again very set up for a drop. We talked about this last month going into expiration, and we've got a very similar setup. Gold selling off, no real haven to hide in, can't hide in crude. It could fall apart any day. And everybody pressing themselves into one very narrow sector, that being the semiconductor space. Other than that, just no really, like I said, can't say that it's a seller strike or a buyer strike because we're up 1 point on the S&P cash. But you can say that there aren't a lot of people wanting to push on either side. Kind of makes you think of one of those ropes where everybody gets on one side or the other, tug of war, and everybody lets go at once. Because I think everybody on both sides just has. No one wants to short the market. No one wants to sell the market. No one wants to buy the market. And what we have is just no volume. So we'll talk about this a little bit more. Of course, we had Comey testimony that ended up making some news, but probably the only things that we found out aren't things that the people that were doing the investigation wanted to find out. I'll leave you to check out the news, but I have a feeling that if we were to read about the next Jonestown massacre, it's probably going to be at CNN, because they come away looking the most foolish of all of the players in this, and nobody comes away looking good. Comey, not the president, especially the weasels who apparently lied for a long time at CNN. And what else can you say? Just everybody looks bad. What else do we have? Again, still no 1.5 billion shares. I'm sitting here watching this. I want to get up there just like the old gas needles that used to stick all the time and just sit there and bang on the glass and say, I know that there's some volume in there somewhere. Please just give me a gallon to get to the gas, the gasoline. I want to say gasoline store. It's a gas station. But just nothing there. Well, let's get into some volume. Let's get into some history, because we all know that this is all about history. Now all I got to do is find it because my regular thing doesn't seem to be working. We'll try it anyway. Oh, there it is.
And it's all just a little bit of history repeating.
It is. Oh, let's go back here. On 1999, on this day, drcoop.com goes public on the NASDAQ. I remember this day as well as the back of my hand. The NASDAQ was selling at 93.75. Oh, excuse me. Selling at 9,375 shares at $9 each. A brief shining moment. Founder Dr. C. Everett Koop's stake is worth more than $50 million within a year. The online healthcare company is on its deathbed. I think it lasted all of 14 months. And surprisingly enough, I heard just a huge amount of bovine excrement hitting the fan this morning for dubious news, i.e. fake news in financial parlance. And a lot of these things were just kind of really bizarre. The first one was Nordstrom's, and the thought was that they're going to have some kind of private buyout. I thought that, if you're long and you're getting smashed in these retail shares and everybody's short, man, what is the easiest way to get out of your position is come up with some phony baloney stories. Maybe you have some people complicit in a firm that does buyouts. But is this about is buying a retail store in a mall like Nordstrom the equivalent of trying to buy coal 3 or 4 years ago and just know it's going lower? There's nothing you can do about it. Until there's a new president, nothing's going to change, that he's going to use the EPA to destroy coal. You may not like it, but you're going to have to live with it. And with 150 more major malls closing in the next year, about 50 of these have Nordstrom's in it, from what I understand. Why in the world would you think for a second of buying and doing a private buyout? Maybe these guys know more than me. Maybe they know that people are going to start going back to the mall. I haven't seen any evidence whatsoever. And the question is, maybe you're the last store left in the mall? Does that seem to make sense? Anyway, why we have a quiet market, I wanted to talk about a few things in market psychology. So we're going to talk about that in the next segment. And then we'll go to charts at the bottom of the
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're all market psychologists to some extent. Most of us see that psychology come through in charts. But there's kind of a very interesting idea. And it's not the traditional stuff you see on TV, which are, economists, for the most part, not any better than any witch doctor that you've ever met, or psychic that you see on the thoroughfare of a carnival. But what we have is something called Campbell's Law, and I just go on it's kind of a broader way to think of the markets out here. Campbell's Law is often cited as warning about the dangers of making data-driven decisions based on a single key performance indicator. And in the case of the stock market, of course, that's the indexes. For example, a sales manager who requests monthly reports on the number of calls each sales representative makes may inadvertently cause the problems for himself if he holds this metric up as an important criteria for bonuses. According to Campbell's Law, once the salespeople know they're being evaluated on this metric, they may put more effort toward making sales calls and spend less time on other important tasks, such as trying to close sales. We've seen it, especially down here in Florida, with the one child left behind. Suddenly, the teachers all started phoning, or a lot of them did, phoning up tests, and of course, teaching only to pass the test each year, not doing anything to actually educate their kids. That fell by the wayside. So a rather decent and moral thought, which is we've got to get these schools a little bit better, literally only made them worse because suddenly no one thought that actually educating the kids was the way. It was to make sure that they had good test grades. And it just got worse. And, of course, you then get everybody complicit, including the teachers in this. And everybody hates it, and it finally goes away. So there's a lot of good ideas. Idea that everybody should have health care, great idea. Unfortunately, it certainly turns to the worst possible thing you can think of because you can't really tell everybody what you want to do, because if you did, you'd never get it passed. We know that. But just my point in this whole thing is everybody fixated on maybe just the top indexes and really not looking at the broad markets. And that's kind of the reason why markets keep going up a lot farther than they should. Everybody just says, oh, the S&P's up. Well, everything must be great. The NASDAQ's gone to a higher high. Everything must be wonderful. The metric for the markets, it may be one measure, but once you make that measure a target, it becomes corrupted. Another good example, and I got enough time to get this in, because I just think this is about the neatest thing in the world. British government was concerned about the number of cobra snakes in New Delhi. Do we have anything else out here? Oh, we have Jim from Palm Harbor on. How you doing, Jim? We'll get to this again.
Hey, doing great. This is the first time I've ever called you, and I enjoy your show a lot. I've watched it for 2 years, I guess.
Well, thank you.
Yeah. I was going to ask you about Raytheon. I had gotten in it before Trump went to Saudi Arabia.
It's RTH, isn't it?
RTN.
RTN?
Yeah, Raytheon.
Okay. Just want to make sure that my engineer typed in something that I knew had nothing to do with Raytheon, so I wanted to make sure.
Oh. Yeah.
Okay. So
and I had gotten in it before Trump went to Saudi Arabia, and then I got out of it when it hit its high. But
okay.
I thought I would get in it again since it pulled back quite a bit, and just want to know your opinion. Should I just get out or not do it again, or what?
I'm fairly bearish on the entire market. To me, the risk reward would come in at about 154, 155.
Okay.
You see what I'm looking at back here about the 1st of May?
Right. Mm-hmm.
That's, if you're talking risk reward, you'd like this thing to dip back into that area and then close back probably around 155 or 156. And probably on less than 1 million shares.
Okay.
So I think you got some time in this. You probably have the whole summer where Congress is going to do nothing. This is going to take probably some big appropriation in the military budget to really change this in any meaningful way. And you could get that, but you're going to need to see some wins out of the Republicans to get some of those new things across the goal line. And I just don't see that or any news really leading to that probably through the rest of the summer. Short of someone shooting a missile or some act of war, the risk reward on this to me would be about 155.
Okay.
So that's I think you had a good trade in there. It's just I don't see it back in here now. Could it bounce? It certainly could. I mean, 158 seems to be 158, 159, maybe one more day back here. Could it bounce for a couple of days? I think it could. But 160 to 164 isn't enough. A 4% gain in a stock, probably not enough for me. I'd much rather be at 155 and go to 165 or something, at least get a $10 trade out of the thing. You see my point?
I do. Okay. I actually worked for Raytheon years ago on the Mavericks and the Standard missiles for the Navy, and I noticed they got a $600 million contract announced today with the Army on updating software and some other things on some missile stuff. But I know that they get little contracts all the time too, like $5 million and $10 million. But
I wanted, since I was sought after to work on one of those missile projects, did your I don't know how you got your job, but I'll tell you how they offered me one, and that's to work on non-nuclear components for nuclear devices. That was the title. Mm-hmm. Does that kind of sound like what you were handed when you got your job?
Yeah, I actually lived in the town, Bristol, Tennessee, where they had a plant for many years. But the plant was actually owned by the Navy, and Raytheon decided to move everything to Arizona, and I decided to not pursue going to Arizona. And but I was just an electronic tech. I worked on the guidance systems and those things, and I enjoyed it. It was good. The only thing I didn't like, anything military, you got a lot of paperwork.
Oh, nothing but paperwork. My mom worked for a company that was putting together the cruise missiles. So that's why she wanted me desperately to go to work there.
Oh, yeah.
So it was an interesting place, huh?
It was a great company to work for. I really enjoyed working at Raytheon. So
they dragged me around there and showed me all the places that they were making the World War II bomber engines in. They still had them sitting around on the outsides of the plant, and you could go back in there and look at them. And it was Bendix was the company she worked for. But yeah, it was very interesting. She wanted me to work there very hard. Well, you have a great day. We'll get back to my soapbox.
Okay, you too.
We'll talk about pythons, and then we'll get into some charts.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Anyway, I was going to get back to my soapbox. There's a thing called the Cobra effect, and the British government was concerned in Delhi, India, around 1900, about a lot of cobra snakes. They were everywhere. The government offered a bounty for every dead cobra. Initially, this was a success, as large number of snakes were killed for the reward. Eventually, though, everybody figured out the way to make money is start breeding cobras. Government figured this out and decided to nix the program. And instead of killing the cobras, everybody just let them go. There were twice as many cobras as there were before. The moral of the story, and this happens more than once, actually, just about 1920, the government of Vietnam did the same thing in the capital city for rats. They said, just turn in a rat tail and we'll give you some cash. There were all these rats running around with no tails, they found out fairly quickly. The tails would grow back. You didn't want to kill the rat. You actually wanted to make sure that he hung around for a while so that you could turn in yet another tail. The moral of this story is, and goes back to QE 1 and 2. We have yet to pay the piper for everything that's happened. There will be some unintended consequences from all the molestation of the markets by the Fed and others. And I don't know when that's going to come along, but everything has a opposite, not an equal, but certainly an opposite reaction that generally the government does. And I don't know when it's going to come along, but I do suspect that we will see a fairly decent move down one day in the market as at least we find out what the ill effects of all this market molestation, I call it, is. I think that it would have been able to do it much better. Would have been done a long time ago. I think after a year or two, you're in the hospital. If you're not getting well, maybe you should find a new doctor. No, we just doubled down. Whatever they were giving us, they just gave us twice as more. They didn't say what is the main problem. People in politics really can't answer that, right? They have to avoid the real problems, come up with some other problem that we never heard of before. And that's generally it, whether it's economics or public policy. But just a little thought out there that throughout history, whatever the government tends to want to do, everybody finds the way around it and the way to make money off of it. And it almost always leads to a condition that was worse than when they started. In fact, the government should have the motto of doctors, which is first do no harm, but they seldom do. As Groucho Marx once said, the job of politicians is to look around for trouble, find it everywhere, and apply the wrong remedies. And that's about it. Just a thought out here. I think we have a fairly decent indication of a market that is heading into hurricane season, as I said earlier in the den. What else do we have going on? Let's start looking at some charts out here. Been waiting for Apple to do something, mostly because the watchers of Apple the last couple of days during its developer conference initially came out and said, we don't understand why Apple's showing a product that they really can't even demonstrate, i.e. their Alexa-like device. It's not going to even be ready until Christmas time. It's 2 or 3 times more, and maybe 4 or 5 times more than similar devices from Google and who else? Google and Amazon. What is the whole idea that this is the new idea for them? You had a kind of a big day out here. What is it? 50 million shares. Let's find it out here. You had 50 million shares on the 17th of May. It's worked its way back up here, but we're about 13, 14 million shares today, 21 million shares yesterday. That's back down a little bit. I'm not saying this is the best stock to short, but it has become incredibly hard to push the stock any farther. Normally, in very bullish markets, people will believe anything. I covered that at the very beginning of the show. And from a variety of places, it's no matter what the idea is, it's 100% going to pay off. Flakier ideas are even more believable to people at highs in the market because they pretty much shirk off all the disbelief. $350 for an Alexa-like device. Are there people at Apple that will buy literally anything Apple makes? Yes, the iWatch is a good example of that. Is this thing going to move the needle or change any of the downside in the iPhone coming up? If there is some downside in the iPhone, the answer to me is no. They may sell 20 million of these, over the first year, but that's not going to put a dent in what they do. The iPhone is a very interesting product in the fact that it is almost, or the success from it is almost unduplicatable. Kind of like Orson Welles making his first great movie, The Citizen Kane. You can only kind of go down from there. Still thought of as the first or second best movie of all time. What do when you come out of the gate and you do everything perfect? It becomes very problematic for them to move the needle. And these new products, the iWatch, these other ones, they're going to need something really huge. And again, something that makes huge margins. Any product that sells for $200 or $300, the most that they can make is $200 or $300 if it costs them absolutely nothing to manufacture. But it costs them about a little over $200 to make an iPhone, maybe $220, $240. The new one's going to be about $300 and sell somewhere around $900 or $1,000. The question is that higher dollar amount going to be enough to really push Apple through the highs of this? And it's very tough when you have everybody. We brought this up before. When everybody's long, who's left to actually buy it? And that becomes a huge problem. We just don't see any real volume over here on the right-hand side. I don't see any new products. And the way that they flogged this with the shills on CNBC the last few days, that you must own it, you must buy it at the highs, you can't wait for this thing to come back, you got to buy it now, makes me think that this thing certainly has a pullback to 143. But I think in an extended market pullback, 125 would probably be the right price on this stock. Again, if this thing starts to pull back, not the stock to actually short. The suppliers to Apple are the ones to short because they have a lot more leverage in this. And when things get tough, Apple will go and beat on their door and try to beat them down on price even more, threaten their livelihood by moving to another product if they don't give them a better deal. There's a couple of things you don't want to be in this world, and I think that's a supplier to Apple right now and a supplier to Walmart. Any opportunity they have to come after you for money instead of making it by selling more is generally the preferred path for these big companies. We'll be back after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Well, we're way off the top of 2440 on the S&P cash. We're down to 2431. The low of the day is 2428, so we're 3 points higher than that. Volume has been pathetic. I can't think of a better word to use than that other than wimpy. It is non-existent. I feel like doing the parrot thing from Monty Python. It has joined the choir invisible. It's an ex-parrot. I don't know how many different ways you can say it. You just got no volume out here today. Again, going above previous highs, just no juice. Continuing lower dollar volumes, continuing lower volumes in general. And when you get to highs, you don't want all the volume to drop out. You can have markets that kind of chew away at the top, but normally the volume has to at least be moderate. You don't get no volume and it chews through the highs. You always get like medium volume, and then it kind of hangs out there for a while and goes through the highs. This has been pathetic volume. You've got a few times where they've run some shorts in the marketplace. The market doesn't really move that far. It moves just enough to get them out of the way, and then that's about it. Then everybody's turned sideways again. So anyway, I'm thinking that we do have storm warnings up, especially for the next week. Had an email during the break also that talked about what I thought and saw in the options. And the options actually have a very bearish pale for the next 6 trading days before monthly expiration. They show a weakness of a possible 80 points lower. So this could be a fairly decent one. We got the pop down that was a buy. We may get the same thing now or again this week. But I think we went into that Tuesday or Wednesday, the market fell apart. We were down 45 or 50 points over the next 2 days, and then it ran right back up. We are the market internals look so much even weaker than that at a minimum, I think we're going to get a pullback, and this may be some kind of decent, at least all summer long pullback. I don't think that anything would change until September if we did start selling off right now. Again, I think heavily leveraged positions with options are exactly the way to play this market to the downside. If we go higher, maybe go 10 points higher in the S&P cash. But the risk reward is 5 or 10 to 1, the way I look at it, if you look at options out to July. So I'm going to be sitting on my hands for all my subscribers out here. I don't see any reason to change any of our positions. Overall, I like them all. To see what else we have out here. Oh, we were talking about Snap yesterday. I had somebody call up and ask about it. This is kind of what you tend to see in highly overshorted stocks. This is coming back into its previous low of May 11th at $17.60, 131 million shares. Got 28 million some odd today. So you're going to get in there, and you were at least into that candle today. Here's the problem with shorting stocks that are massively short. Going into a downturn, they tend to rally first. We talked about the phony, what I think is a phony buyout offer for Nordstrom's today. We'll look at the chart in that. You get the same kind of thing. Now, they hammered this one with a lot of supposed news from another source that they're not selling any ads. Never heard of the source before. It's not like one of the big names in technology. Some company out somewhere said that they don't have any ad growth or even negative ad growth. I don't know if that's true or not. I will tell you that the pattern is to hear a lot of that, see something like this, and then the next day, the company itself or several other folks will all get together and say that the ad revenue is rising. And in a down market, club the people that are the most heavily short. So whether you're looking at Tesla, let's take a look at that real quick, TSLA. These tend to run the hardest right before a market change, and they tend to, at least for a handful of days, go against the market. These tend to be the Swedish shorts, not Swedish, but sweetest shorts. But you look for some kind of intraday spike that runs the last of any shorts left in the market out. So in this one, in Tesla, what you would want to look for in the next couple of days maybe is a 10 or 15, maybe even a $20 move that then gives it all up within the same trading day. Those are the kind of signs that say it's all over. Everybody knows it on Wall Street. There's no volume at these highs, and it's headed south. But you'll see the market move a couple of days down, maybe even 2 or 3 or 4 days down. Then you'll get kind of a spike in one of these things. You'll get the big reversal signal, and even some of these heavily shorted stocks, you can pull the trigger on then. You can give me a call at 877-927-6648. See if anything else. But I like it. 24.28 on the S&P cash. We're off 4 points now. Going to go down here and say hello to my little friends from earlier in the day at the low of the day at 24.27. Volume is starting to pick up slightly, but still, this is going to be a light day. I don't know matter how much volume you get at the end of the day, it's probably going to be a light volume day. Still have not hit 2 billion shares on the NYSE consolidated tape. We like to start the show with 2.2 billion, and we're short that by 250 million. So it is going to be an extra light day, once again, testing tops with no juice. Okay, so we talked about that. We talked about those. Let's talk about some others. Xilinx have been kind of watching this for the SMHs to see what happens, mostly because this is kind of a good indication of actually what's happening in the semiconductor space. Wanted to see how this went up against the May 22nd high at 67.75 that had 5.5 million shares. Well, you go into it yesterday with 2.8 million shares, today 1.6 million shares. This is probably a better proxy than just about anything for the semiconductor space. There is a reason why. We've talked about it before. Xilinx makes programmable chips. When you're in a hurry to get to the market and cost is not the biggest concern, it's getting into the market. Things are changing. Everybody's in a hurry. You buy a lot of these Xilinx chips. I was an Altera guy. We worked at an Altera house. But it's the same thing. You go for these programmable chips. If you're making a profit that has kind of low margin, you can't live with these things because they're fairly expensive. What you do is kind of develop the technology with these and use maybe 200 or 300 in-house while you're developing the product, and then you go and make a chip now that you know all the secret sauce that goes into making something. So what you should see in this, if the market is really juicy, is not this huge gap down to 62.92, 9 million shares just a scant 2 weeks ago, but you should see real juice coming into the market. To me, this is the sign that the SMHs are very close to a major pullback. We'll be back for the last segment. Give me a call, 877-927-6648.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And Microsoft's got a little crack in the window today, down on 16 million shares, which is not a great deal so far. This thing has looked for a very long time that it wants to come back to about 66.50. I think we've got the first step in that direction today. Not a lot of juice so far. In fact, when we take a look at the summertime, we may just have one of these summers where it is, not the giant gap down, but just the drip, drip, drip throughout the summer until we see some kind of resolution on taxes and other things coming late this summer. So right now, I think everybody's looking at Washington, D.C. as a stalemate. You're not going to see any real news out of taxes or healthcare till late in the summer, if not September. And so what are you going to have? What's the catalyst for going higher other than everybody just saying that the market's going to go higher? Well, it's kind of a tough sell out here. What else did we have? Wanted to look at a few other stocks. Again, these retail stocks, any stock can bounce if it's beaten down far enough. Someone thinks that there may be some kind of value in it. Under Armour actually had tests of 1840, a second test with about the same volume. So there's not a lot in this one. But again, these things don't fall apart all in one day, nor do they recover all in one day. But again, when everybody sees that a stock is short, one of the hardest ones to be short certainly is a retail stock. And again, if these things are 20, 30, 40% short going into a downturn, look for these things to outperform the market for a few days before these things start heading back down to the previous lows and busting them. Under Armour, I'm not sure on. Their products don't have to be sold in malls, although they did very well with them. But again, it's one of these things where, this thing came off, it's come off fairly hard. So what do you do with them? Well, I don't think you go long them. Very interesting to see with the automotive business down that we're continuing to see fallout lower in the auto parts manufacturers. Not a lot of volume today, but it still looks like it's broken and will hold the lows of May 23rd. Those were 234.14, just under 1 million shares right now, but no real sign that we won't have. I mean, this is not a bad looking chart out here. If the market turns around and heads south in declining markets, these auto parts companies have done fairly well. This one looks fairly good. But right now, you'd need to close back into 234.14 to do any better. Unfortunately, we've gone so long without a decent correction in the marketplace that I think that the market could just eat everything on the downside. So I'm not a big fan of trying to go long. We talked about natural gas last week. And, of course, after that gap and a couple of times this week, don't see anything changing in natural gas other than this thing has the ability to go sideways for a long time. That's $6.48 on a 14 million share low certainly looks like something you want to test. In commodities, seems like you get washouts so much more than you do with equities. My guess is that through the summer, unless we get a giant heat wave, that February 27th low is going to get tested at 648. And my thought is that even if it tests it, you probably don't want to be looking long until the first or second week of August. So today is Thursday, all day long. Andy Heck is going to be on. Maybe he'll talk a little bit more about ethanol. He had an article out about it. I had questions about it. He answered some of them, not all of them. Maybe he'll talk more about today with Tom O'Brien and his show at 5 o'clock. Tom, between 3 and 5 today. We'll see you tomorrow. Same bat channel, same bat time. Sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.